Hey everyone, welcome back to the channel. Today's video is a Wednesday aftermarket recap for NIO stock. We'll be reflecting on the day's performance, exploring the broader EV landscape, and discussing where things might be headed next. If you're holding NIO stock, thinking about entering a position, or simply following the EV sector closely, this one's for you. So let's start with today's action. NIO closed the session at $4.68, up 1.52% on the day. While this may not seem like a dramatic move, it's actually quite significant when placed in the context of the past week. Just a few days ago, NIO hit a low of $4.50 after a wave of bearish sentiment driven by softer-than-expected delivery numbers and weakness across the broader indices. But since then, we've seen a bit of a rebound, and perhaps, more importantly, some resilience. That's where I want to anchor today's discussion: resilience. Because while the stock isn't exactly breaking out, it's also not collapsing under the weight of negative catalysts, and that in itself is a notable shift. Now, let's rewind a bit to give this some context. Earlier in the week, NIO reported its July delivery numbers, just under 21,000 vehicles. That's down slightly year over year and came in just below some analyst expectations. The reaction in the stock was pretty immediate, with Monday's session seeing a sharp drop. But even then, there was something unusual. The selling volume wasn't as high as we've seen in previous dips. It was as though the market was acknowledging the softness, but not overreacting to it. By Tuesday, the sentiment began to stabilize. We saw early morning enthusiasm give way to some intraday selling, likely as traders locked in profits or stayed cautious ahead of broader macro data. And that brings us to today, Wednesday, where the stock finally posted a clean, upward move. Again, not a breakout, but a step in the right direction. So what's driving this shift in tone? Well, first, let's talk about the broader electric vehicle space. Tesla has had a choppy week, and Chinese peers like XPeng and Li Auto are also navigating a mix of cautious optimism and investor fatigue. But one of the standout elements is that despite delivery shortfalls, NIO is continuing to make strategic moves that signal long-term ambition. There are reports of continued progress on their in-house autonomous driving chips, and their European expansion is still on the radar, even if it's not moving at the speed some had hoped. Institutional sentiment also deserves a mention. While there hasn't been a big spike in volume from funds, we are seeing some increased accumulation around these levels. That suggests that the $4.50 to $4.70 range is starting to look like a potential base for the stock. There's no guarantee, of course, but when you combine this with improving technical support and a gradual rebalancing in sentiment, it's worth watching. Another angle worth mentioning is the macro picture. Inflation remains sticky in the US, but the Fed has shown signs of taking a more measured tone recently. If we're entering a period of rate stability, growth-oriented names like NIO stand to benefit. They've taken a beating under tightening conditions, and a more accommodative environment, even if just sentiment-based, can provide some much-needed tailwinds. Now let's look at the technical side of things. At $4.68, NIO has bounced off that $4.50 support level we mentioned earlier. The next resistance level is sitting around $4.80 to $4.90, which the stock has struggled to decisively break through in recent weeks. If we do see a close above that range in the next couple of sessions, it could open the door for a push back to the psychological $5 level, a key area for retail momentum and options activity. Volume today was relatively average, not a spike, but not weak either. This kind of movement without outsized volume suggests a healthier build-up rather than a speculative pop, which again fits with the idea of slow accumulation. In terms of indicators, the RSI is hovering around the mid-40s, which suggests the stock isn't overbought or oversold. That might sound neutral, but in the current market, neutrality is often the calm before a directional move. And with recent volatility compressing slightly, we may be looking at a setup for a more decisive trend. Let's briefly circle back to those delivery numbers, because it's easy to get lost in month-to-month comparisons. While July was softer, year-to-date deliveries are still tracking relatively well, especially given the competitive pressure and economic uncertainty in China. NIO remains committed to its product pipeline, battery swap infrastructure, and technology development. In fact, there's increasing chatter that their upcoming product cycles, particularly the revamped ES6 and their first mass-market sub-brand, could be game-changers in terms of scale and appeal. And that's the thing, NIO isn't just trying to be another EV automaker. They're building an ecosystem, a user-centric brand, and a vertically integrated supply chain. Those elements don't always show up in quarterly earnings, but they build the foundation for long-term growth. So, where do we go from here? Looking ahead to the rest of the week, there are no major NIO-specific catalysts on the calendar, but we do have broader macro data, including jobless claims and global manufacturing reads, which could impact sentiment. If the market gets a lift from better-than-expected macro numbers, NIO could ride that wave, especially if it holds above $4.60 going into Thursday's open. And heading into next week, we'll be watching for any updates on partnerships, chip development, or government policy in China that could affect the EV sector. The Chinese government has already signaled more support for consumer spending and innovation, and NIO stands to benefit from both. In summary, today's 1.5% gain may seem minor on the surface, but it represents something bigger: a stabilizing base, a reset in sentiment, and possibly the start of a slow grind upward. The breakout many of us hoped for earlier in the week may have been delayed, but it hasn't been denied. The ingredients are still there: the vision, the tech, the support, and that's why the long-term story for NIO remains compelling. If you're holding NIO, it might be a time for cautious optimism. If you're on the sidelines, this could be a good opportunity to keep the stock on your radar, especially if you believe in the long-term evolution of EVs and the strategic role that China will continue to play in that space. That's it for today's video. If you found this helpful, make sure to like, subscribe, and drop a comment with your take on NIO's recent moves. Do you think this is the start of a longer-term recovery, or just a temporary pause in a broader downtrend? Thanks for watching, and until next time, stay curious, stay patient, and stay invested.